All right. Good morning.
Good morning from Illinois.
Good morning from Florida.
Good morning. Good morning.
Humid, humid Florida today.
Rainy and
And my
cold.
and my windows are sweating. It's so humid out today.
Yeah, we were in the 50s yesterday and be in the 70s today. Sunny skies today. Then
Oh,
back down colder this weekend.
Yeah, New Jersey 56, and
Yeah.
it's comfortable.
you all need to move. There's a
Don't
lot of
have
homes
to.
for sale in Florida. You all need to move this way.
He has a house in Florida.
Yeah.
Get a good deal.
Well,
Get
you
a
have a
good deal in
boat.
Florida.
They can't
Oh,
get
you
there
can.
though. They're canceling flights and everything out of
We,
Newark. It's horrible.
we got to fly out of somewhere else.
A lot of
Just
jokes on Newark.
Yeah.
you
Jokes
need
everywhere.
to
Yeah.
you need to get a chauffeur, Bob, just to fly you down there. Get a NetJet card or something like that.
Yeah. Yeah.
No. I've looked at that, but that's not for me.
Yeah.
That's like crazy money, and
You can do a
that's
budget or whatever that one guy does. They always have a
such a waste.
commercial. Cars waiting for you when you get to the airport too, Bob.
Yeah, I know.
Or maybe maybe OJ will pick you up.
Yeah, could
Parks rent a
not.
car.
Yeah.
OJ is 6 feet under.
Oh,
Yeah.
is he? Is he
Bob
dead?
Yeah,
got
You
a
didn't know that?
yeah,
No,
he's dead.
I
Wow.
totally,
Boy, you are way
Yeah.
behind.
yeah. I'm still in the 70s as he's running through the parking lot. It hurts. So,
Maybe
I
in a
love
different
I
um,
love
world.
when they show the Bronco going down the highway and it says not OJ on it.
Yeah.
oh, all
Okay.
right, Mark. Let's get
All right.
rolling.
Let's get rolling. Busy day. Markets are down this morning. 0.7 on the Dow, half a point on the S&P, half a point on the Nasdaq, and it's because really people are watching the 10-year here. You know that it's 4.53%. Um, you've got some geopolitical issues. There's thoughts out there that Israel's getting ready to maybe bomb the Iranian nuclear sites. You've got this budget battle. Uh, you know, in Washington, they're looking for maybe a vote out of the House as early as today or tonight. Of course, you got the tariff issues going on. Um, we just got to be careful. This is where we have our stops. Make sure you go and see where things might be opening, and then you might want to place your stop a little lower to preserve any gains that you may have or prevent any losses that you may incur uh, or reduce those losses. Let's see what else we got here. So I want to talk a little bit about our watch list. And I don't spend too much time. We have three watch lists I put out. There's the momentum watch list, the under 200 watch list, and then just the regular watch list that goes along with my trading plan. So I don't talk much about momentum watch list, but we have it because people like to trade momentum. Okay, and you can go Sunday and see in our charts of interest. And this week we had 14 on the momentum list. Okay, and I always let you know that these don't have resistance levels on them. And for me, without these resistance levels, it can be more challenging to manage your risk. Without clear resistance, difficult to determine when to exit a trade. In addition, momentum stocks trade usually above the upper Bollinger Band, where only about 5% of the time the price will trade above the upper Bollinger Bands. So again, I don't usually trade them because I've been burned on them, and it's trading at the top of the level of the chart, and I want to trade more at the bottom of the chart and get more upswing. So that's why I don't particularly trade those. Um, the primary purpose of the Bollinger Band is to show volatility. Okay, when the Bollinger Bands are compressed, there's less volatility, and define statistically likely pricing range. So the Bollinger Bands are plus or minus 2 standard deviations off the mean, which is the 20, usually the 20 SMA. So when the price moves outside the bands, it's often statistically likely to move back inside, okay, because they only trade out of their 5% of the time. So entering a long position precisely at the moment price goes above the upper Bollinger Band without other confirmations can expose you to some immediate pullbacks or reversals leading to losses. So again, that's why the Bollinger Bands are important, but they're important in the construct of other conformations and oscillators that we use. So I wanted to kind of show, we had 14 positions on the momentum list starting Sunday, and as of yesterday, I think only 4 remained. So 10 of them, the Bollinger Band basically came, or not the Bollinger Band, the intermediate resistance level appeared, and we just stopped your trade. And I'll just go through the ones, the 10 that we had. We had APH, and so you can see that this is your green line, your intermediate resistance level right here. Okay, on Sunday that wasn't there, so you had just this rolling up without a resistance level. We did have some sell orders at the top. So when that went on the list, Monday you saw the trade kind of go sideways, and then Monday after market closed, you saw this green line, which is the intermediate resistance level, come on, and now you're seeing the sideways trade. You're seeing again what I've always said is the 9 coming up and squeezing, and usually when this comes on, it's kind of a death mark 90% of the time for your momentum continuing up. So, had you gotten in up here, you'd be sideways or down because there was no resistance level shown at that point. So again, that's why I don't like to trade these. You go to our second one, TEL, the same thing happens. Okay, here's where this was Monday, this was Tuesday, and this line, this intermediate didn't show up till Monday night, Tuesday. Okay, and you can see we're going sideways. Looks just like the other chart, even though the momentum was up. The problem is you want to come down here and get into these trades, on other indicators such as, okay, we crossed the 200, we maintain the 200, and then we go up. But still, when we play around at the top, you don't have much on the reward side. You have more on the risk side. This is our third one, Z-scaler, exact same thing. Okay, this came on after Monday. You can see what happened. We're pretty much sideways, and the Bollinger Bands are rolling over. Okay, here's our fourth one, Charter Communications, same thing. You want to look in here. Okay, it's popped up, got up, confirmed. This is what we're looking for, is this run. At least I am in a swing trade. I'm not looking to get in up at the top and then have this potential issue happen. If I get in here, then all of a sudden the resistance comes on and I start a sideways to downward motions. AHR, same thing. Okay, it came up, played outside the Bollinger, came back in, resistance came on. And I've been burned on as General Electric. Had a nice run. This is where you want to come in, get that run up. But again, resistance sideways. So depending on where you get in, if you are playing at the top, your reward is less than your risk. Okay, if you're playing at the bottom,
Yes, sir.
coming up. What's that? Okay, didn't hear
Go
you.
ahead. I got it.
JCI, same thing. Train, same thing. Again, Monday, Tuesday. HWM Aerospace came up, same thing, Monday, Tuesday. MasterCard came up. Here was Monday, it was coming up, and then we're sideways. Again, we've got this squeeze being put on by the 9 and the resistance level that just came on. So it's just going to be hard to get above that level. You could get up to where the intermediate, where sell orders are. But again, we're really looking to get in back here and ride something up as opposed to getting in, at the top. And it's just hard to know where the top is if you don't have resistance showing in that line. And that's how I look at it. So again, I just want you to be careful that those are the most risky of the 3 watch lists that I put out. And I don't trade in those. I know Paul trades in them a lot. But for the guys who are starting out and the beginners, this is not where I would start, on momentums, but, work your way up to that potential level. And so I just wanted to put that out there because every week I put out these charts or these lists, it's always the momentum ones that within Monday, Tuesday, majority of them are off the list. Whereas if you, let me find this, if you were to get in at the bottom, and I'm just going to use this as an example here. I'll put it back up. And this is one we've had on the list, on the watch list. Okay, where we put it on back at this level. This is what I like to see. You still have resistance has been on here. It's up above where sell orders are, and you're just, you're riding it up. We put it on the list, at 26.80, and yesterday it closed at 35.31. And today, with the market the way it is, if you're in this position, you're like, okay, the market looks to be down. Here's where we're going to open. Okay. So again, you may want to preserve gains and put a stop in. You may want to put it, below the 9. You can see we've got support at the 9, maybe a little below. You may want to put it at the 20. You're still above your cost basis. So you can manage your risk and your reward, because your reward, you've already booked the reward here. So that's what I'm kind of looking at. The watch list is more of a long-term, try to find, in it where it turns and we start heading up and riding that. And again, we've been in this, for quite a while, and then even on the 200, okay, we had cores. This is more of a crypto kind of stock. We put it on the list, at 932, and it's been riding up. It's going to open. If you were in this, you're seeing you're coming up to where you have a Bollinger Band meet where sell orders are. You're still under the 200. You're going to open up, a little bit lower because the market's opening up lower. You may want to put a stop, down below the 9. So if it does come down and it goes back up, you don't get hit. But if it does, drops, we get a really good drop in the market. It hits and you make this much of a gain. Okay, so you're managing your risk. You already are in the money. You could take it out now and be happy with that, or you can ride the charts up, and try to gain more. You could sell half, but always maintain your profits, by maintaining the stop to preserve your gains. It's just harder to do when you're playing up next to resistance or without resistance, of a 50 or an intermediate resistance level. So I just wanted to bring that up. One thing I've been watching, and because the market's down, I'm not going to go through all of them unless you guys want to later. Here's Bitcoin. We've been watching it. Bitcoin yesterday closed, above the resistance level for the first time with a candle. And then today we're still up and we're still moving in this upward trend on Bitcoin. I wanted to go back and show you what's happening here. This hasn't happened yet, but you've got the 50-day moving average almost crossing the 200, and that would be a golden cross. It has not happened yet. Let's just go back and take a look. It happened right here. Okay, you can see we had some run up, then we had a golden cross of the 50 over the 200. You can see what happened. Okay, let's go back a little further. Way further. Here's a golden cross right in this area. Well, it's not showing me. Let me go back to the 2-year and it'll show me the. Come on. Okay. So here we had one. You can see what happened. Here we had a golden cross. You can see what happened. Now, past history is not an indicator of future, gains, but this is the 4th time we had a cross, went over, so went up and up. So we had 4 times all the way back, to 2023, where you've seen this golden cross. And so that just gives me more of an indication that we might be seeing, Bitcoin break out a tad bit here. And the fact that we're over where we had resistance before, and we're gaining in on the all-time high of 109. Today we're at 106.5. We're not that far away. That if it gets above that, you might have some room to run, on Bitcoin. And again, it's proxy MicroStrategy. I'm going to bring this in a little closer. Again, we're going to open right about where resistance is. And this, let's push this up. This has now moved more sideways, and we'll see if that pops. But you got the Bollingers, showing volatility is getting less. But if Bitcoin pops, you're going to probably see MicroStrategy pop also. It just hasn't happened yet. And the same can be seen if you're playing in the ETF world of IBIT. You're seeing we're hitting right on resistance again also. So the catalyst would be if Bitcoin can pop up and get above its all-time high, you'll probably see these things move up to the next level, which is where the sell orders are. So anyway, that's my thoughts for the day, and over to you, Trent.
Right. I think that's a really good point Mark is making, is identifying support and resistance levels. And this is a chart of the S&P 500. It's a daily chart. I just want to point out where we're at. February, this is back in February, OPEX, just after option expiration for the month of February. We ended up basically building a resistance level in this area, and market went down, went sideways for a while, and then continued down into April lows, and then a move up. And what this resistance eventually became resistance over here, and we broke through it back. Well, we had a big gap up there, and you can see where all the sellers are. This is these red blocks, and you can see where all the buyers are. So buying support. And right now, if I take the buy support out of it, so you can see it clearly, we had option expiration for May, Friday, and we're seeing this area that was once became resistance in February after option expiration is now playing out again as resistance, and today we're looking to open up lower. And where is support? And support is where resistance was built between March, before March OPEX, and then soon after as we got into the 1st of April, and that's where everything broke down. And what was resistance is now potentially support. And what I'm anticipating is this 5,700 range on the S&P 500 to become support and a test of that support. We saw the gap up from Friday, May 9th to Monday, May 12th. So that gap's going to get filled, in my opinion, and you're going to see a pullback. And we're starting to see that. When I look at the daily risk ranges that I calculate on the top market cap stocks in the S&P and crypto, they're all came out today with lower highs and lower lows. And that tells me that this run up we've seen since April 22nd is starting to get exhausted. It's tired. You see the volume is, somewhat coming down in the last since May 12th. And so we're starting to see this slow. And what we want to see is truly an opportunity to buy something at a cheaper price. And the market, I believe, is starting to create that. If I go look at the VIX, we're right now sitting right against, since we broke through on May 12th, and we've been going sideways under the VIX in the investable bucket, but we're not too deep into it. We've gotten as low as 1715 on the VIX, but we're basically hovering on this 19 line. And today the volatility looks like it's going to be positive in the beginning, but as we can see in the last number of days since the 12th, volatility opens higher, closes lower, opens higher, closes lower. So it's volatility is trying to expand, but it's not. And I think this is really one of those resistance levels at 19 that we're seeing going all the way back into December, broke through it in February, went back into the investable bucket in late March, and then broke through it back into April and then back. So I'm keeping an eye on these levels in combination with this on the S&P. This is substantial resistance that was built from February 24th to February, no, excuse me, February 24th through, how is that? What am I missing here? Yeah, February 24th to Friday the 21st. That makes no sense. That's weird. But this resistance, and we're seeing it here, I believe is going to push this back. And so the point is risk management. You've made money from April 22nd up till Monday the 19th. Now you're seeing a pullback. How are you going to risk manage that? How are you going to preserve this capital? Are you going to put stops in? Are you going to tighten up your stops? Are you going to take some off the table? What is your plan? What's your game plan? And my belief is you've made a good amount of money. If you're just trading the S&P, you've made a good amount of money. Take some off the table, leave a little on the table so you can be a participant in case we don't get the full pullback, but preserve profits. And I think we're in this environment as we go further into the summer, your chances are something will come up, some news headlines, something's going to drive this thing a little bit lower. But if we can see support right around 5,700 in the S&P, I think if that holds, that could be a great opportunity to start dollar cost averaging into the positions you like. And I think do this practice with every stock you're in. Support and resistance. Where is this at? In the option market, 5,750 is a area or 5,725 on the S&P, and 6,000 on the top side is where you're seeing market makers are positioning their portfolios to hedge out everything. So we're in this range. So expect the market to move around in this range. And if we see a break below 5,700, there's a good chance we'll test April lows again. So this is the time to risk manage. Be careful and prepare for it. All right, let's open up the floor to questions, comments, that kind of thing.
Charts. So Payman wants to know about CRWV. So Payman, what do you like about this chart?
It's been going up, but now
Okay.
it's outside of the Bollinger Bands, and I don't see a green line of death coming up yet.
I like that, Payman. Yeah, this is definitely momentum. It hasn't been around long enough to even have a 200-day moving average. It's not on here. So when I look at a chart like this, I think of, okay, are you in this stock right now?
Yes, I am.
Okay, what's your cost basis, if I can ask?
Let me see. I just bought it yesterday.
Oh, okay. So you bought it, did you buy it inside, outside the Bollinger Band, or?
Inside the Bollinger Bands. Let me see how
Okay.
much I got it for. I'll tell you in a minute.
Okay.
Days change price. It doesn't tell me. This isn't all that user friendly. Keep going and I'll tell you in a minute.
Okay. Okay. Well, you bought it, so you bought it somewhere in this area. If you say you're inside the Bollinger Band, which is good because you waited for the price to come down. Again, this was outside the Bollinger Band. This isn't. I mean, I don't play these because number one, I look at where is my upward. Where's this going to stop? Okay, when I get into a position, I want to know where I'm going to get out, and I don't know on this one. Now you're in and you're up, 1, 2, 3 above the Bollinger Band. We're going to start seeing this come inside. This is a doji candle. This is a candle of indecision. It started opened here, closed here, but in the course of the day, it got pushed down, it got sent up, but in the end, it had indecision. It closed about where it opened. So I'm expecting, to see this move back inside the Bollinger Band. So I do not know where resistance is at this point. Okay, let me go back. Let me go back a year. Okay, I don't know where. Well, this is pretty new. I don't know where resistance is. So you could end up having that green line of resistance level. Let me get rid of this. show up. So you're kind of playing, the way I look at it, it's like flying a plane without a fuel gauge. Okay. I don't know exactly when I'm going to run out of fuel. And that's why I don't really trade in these. And that's why I don't trade above Bollinger Bands. And, the only way, I would trade is if it's following up the Bollinger Band on the inside. That's me. Okay. You have obviously a higher risk tolerance than I do. I can find better positions like IO, what we just looked at, IONQ, or, the time to get into something like this is when you see it get above, the 9. You don't have a 200 yet. Now you're above the 20. You don't even have a 50-day moving average on this one. So this one it doesn't even have 2 of my major moving averages on it for me. So I wouldn't be in it myself, but that's just my risk plan. Okay. I can go find value in trades that are less risky for me, but I'm glad you're in below. You're up now. And so what's your exit strategy on this stock? That's what you got to be thinking. You don't have to answer me, Payman, but you got to be thinking that.
No, I want to answer that. I think it's, I got in around 86.
86. Okay, so let me just visually, we'll put that up here. 86. I'm going to put it in here. Back. 86. And I'm just going to make it a different color so you can see it in a line.
Right at the Bollinger Band.
So you didn't get in you got in at the top of yesterday, basically, right before close. Right? So this is 86. Right? Am I right?
Yeah, I must have. Did I? Okay, I wasn't even aware of that. Okay.
No, he got in at the open.
Well, that's not the open. 80s, that's the close.
Yeah. Well, if you put a 1 day, you'll see it's the open.
Yeah.
If you not the first half an hour. If you put a one today, if you hit your today button on the left, far left, there you go. That's how it traded yesterday. You got that line there.
So no 50-day
go.
trading SMA, no 200 SMA.
It's not where it opens, it's where it closes,
Right, but see, the line is where he bought it, right? That's 86, what you drew. So that's the beginning of the beginning of the day.
Exactly.
So you should have gotten out at the top.
Well,
that's right. I know. So Paul, where's the exit?
oh, for me on CoreWeave?
Yeah.
Yeah, where is the exit?
I think I'm gonna hold this until it's gonna be well, let me say, there's a few things that when I exit this type of stock, I'll exit if depending on how the market is. So when I look at these charts, I put along the S&P to see how the market's behaving. If it's diverging away from the market, I'm in it. If it's not, if it starts going parallel or converging, then I'm out. So I look at indicators, but different indicators to get out.
So to give you an idea, it's going to
Yeah.
open up at 88.70. So you're down $2. Well, almost, yeah, $2 and some change at the open from where it closed yesterday.
It also, you got to have conviction in what these guys do. Like these guys are really in a hot, sweet spot. Many of the shareholders are owned by
Well, let me ask you
NVIDIA.
this. If it pulls back to $60, are you still convicted?
Well, if the market crashes and it goes to 60, perhaps tell me where the S&P is, and then I'll tell you. You know what I mean?
Okay.
So you can't just make a decision based on, well, if the market dives and everything dives, I'm going to dump it. You make the decision based on how the market's behaving.
You lose 5%, 10%. What are you cool with that?
I'm cool because I'm up 40% on this, so I'm pretty okay because this thing probably.
But in the case of payment, are you okay with losing 10% of the value?
I don't know
Payman's
risk tolerance. I'm a whole different. Everybody has their own way they trade.
I was talking
so it's unfair. Yeah.
But my point is the point that I started the whole Zoom call out is these are riskier when you don't know. you don't have an upper resistance level. Well, you don't know. You're going back to the S&P, and that's your system, which is fine. My
Well,
system,
oh,
I look at this and I'm like, this is very risky to my trading plan
Yeah.
because I don't even have I don't have upper resistance.
okay.
I don't have a 200-day moving average. I don't have a 50-day moving average. And I have a stock that just got, it's not even very old. Okay. So to me, this
It
is a
went
higher
public,
risk.
Mark.
It's a
I
higher
can
risk.
always get out now and then get back in later.
No, do you know what they do? I mean, if you have an understanding of what they do, then you have more knowledge.
Paul,
So you're just you're talking from a technical.
I
We're
do
talking
technical
about
analysis.
swing trading.
I do technical analysis on this channel. Okay, so
Yeah.
I don't know what half these companies do. Okay, that doesn't matter to me on these. Okay, so
Well-
I think that's where it gets confusing. Is you use this as technical analysis, and then you say, you know, I have conviction, and it's a long-term hold, but you're using short-term technical analysis to determine when to get in and out. So that's what
Sure.
confuses me. Now, it might work for you. I'm not smart enough to understand your system at this time. So it's more risky for me, because for me, when I look at these technical analysis, I'm looking at it from a swing trading, technical analysis, shorter term perspective, and that's how I analyze it. So when Payman asked me what I think of this chart, you know, my immediate thing was, well, you tell me what you see in this chart, and he told me what I see almost, you know. And what I see with Payman is he doesn't know when he's going to get out.
Exactly.
And he might not have known why he got in, other than the chart's going up. So I'm just trying to help Payman get a little more of a understanding of the technical side of it. And is this, if this is your risk tolerance in the geography in which you want to play, that's fine. But for me, playing outside the Bollinger Bands is not what professional traders will be doing. It's looking back here and trying to see if I can get maximum gain back here. And again, I'm going to go back. Excuse me.
You know, there's also
I'm not trying to be critical, guys. I'm just trying. I'm going back to what Kerry pays me to teach here. You know, and I go back to something that's, I always know where my resistance is. Okay. I always know where my stops are on this chart, and you write it. And so, you know, I don't have to worry as much. This is a less risky trade, okay, than CRWV.
you could argue that Bitcoin's a risky trade too. I mean, you'll hold on to Bitcoin throughout the Bollinger Band because you have conviction. So to that point, it's not
Well,
just swing trading. Hold on,
okay.
let me finish. Let me finish. It's not just swing trading. It's some stocks that you have conviction in, as Bitcoin and Berkshire. You don't sell those. You hold them because you have conviction. So there are mixed messages in here. You can't just say, well, we just do swing trading.
No, there are not.
Yeah,
There are
all right,
not
cool.
mixed messages, Paul, because I said I'm a long-term holder of both Bitcoin, MicroStrategy, and Berkshire. However, I said I do on my swing trading account, I do swing them, and some other people on this channel do swing them. So that's why I go and look at it and I say, look, what the MicroStrategy, okay, MicroStrategy, and I've said this. MicroStrategy, and I said it when it hit this. I said, if I were swing trading MicroStrategy, I'd have been out right there, right where it hit the upper resistance level, and I would still be out. Okay.
My only point is you're mixing, you know, you got I'm pointing out that
No.
as you are, I am mixing conviction
What are
with
your Paul? What are your long
you
term?
can't let me finish a sentence. I can't
What
finish
are
a
your long
sentence.
term? What are your long term positions, Paul? Mine are MicroStrategy, Bitcoin, and Berkshire Hathaway B. And they've always been that for the 5 years, or however long I've been doing this for Kerry. What are yours?
You're on mute.
I want
He's
to.
on mute.
I'm only
I
pointing
want
out
to jump in
that
here.
you have different. I just want to say, I'm pointing out like you. I have conviction in stocks, and it's not just about swing time trading, and that occurs on this channel. That's all. That's all I'm saying.
Payman, let me show my
I just have
chart,
a thought.
Mark.
Okay, hold on.
Yeah,
I
go
love
ahead.
the
Go ahead,
discussion we're
David.
having on this.
No,
Yeah.
but I want people to understand there is a risk involved, and my system is a less risky because I don't want to lose money. Okay. Now, less pain, less gain, they say. But my history, and you can go back and look at it, is good with my system for me. Yeah, I do have long term, but I've always said what my long terms are. But I do include those long terms because I do trade them too. Okay. And other people trade them. Bob's into MicroStrategy and Bob trades MicroStrategy. Bob's into Bitcoin. Bob trades Bitcoin. Okay. That's fine. He may want to know what I think about that. I will trade both and I will keep both.
I
because,
agree. I
yeah.
do want to know.
Yeah.
Does that
All right,
make,
anyway.
does that finally, I says, I agree, does that make my final decision? No, but it's in the mix of my decision. So I think it's important that, we hear all sides. But everybody trades different.
Absolutely.
I trade totally different from what you do here, but I really don't. I don't want to influence anybody by what I do, because that's contrary to what the channel's about.
But I think it's important, Bob, and you've come up with, you've had Walmart and, on our long-term deal that we've done.
Yeah.
And that's interesting because it's not a Mag 7. Okay. It's a regular old company,
Mhm.
but it also has new technology in it and the way people shop. And so that's interesting. And so
But it's clicking.
exactly.
But
Jay-
did you listen to Target today?
I
Not
saw
good.
the highlights. I didn't listen.
Not good. They're doing
Right.
horrible, and their target was really pulled back substantially. I mean, the stock has compressed over the last year or so. It's horrible.
Right.
Hope they didn't blame the
David.
tariffs.
Hey, David, you were about to say something.
Oh, I was just gonna say, for payment there, I noted when you said that you might go ahead and sell at a little bit of loss and then get back in when it goes lower. Just be aware of their wash rule. If you get back in within 30 days,
Oh, that's
Um,
right.
31
so
days.
you might,
Thanks.
yeah, you don't want to get dinged that way accidentally. That's
Yeah.
all I was gonna say.
Good point,
Thanks.
David. Thank you.
Thanks, David.
Hey, Payman, this is your core weave. It went public on March 28th.
Uh-huh.
There's this support resistance or resistance that looks like could become support right around 63.19. You saw it wick up here. It wicked up there. That became resistance. It busted through on May 14th, challenged it on May 15th, and then made its 3-day move to where it is today. So if I'm looking at this, just technically, I don't know what they do. I think NVIDIA is behind them in some way or another, so it's got to be in that sector where I would be looking as an opportunity. I want to see this support and understand it's a brand new company or brand new publicly traded company. So where would be a good entry point if this support level is confirmed? This could be a very good opportunity to start dollar cost averaging in because you have conviction, you believe in it long term. But as Mark pointed out, this doji alone, that's complete indecision. The market doesn't know what to do with it. And think about that. If you bought in down here on April 22nd at the $38.51, you're now in the $90 range. You made a ton of money, right?
Right.
And I think that's where when you look at these charts, technically, look for this. Where did it hit? Got it retract, came back, hit it again, and then the next day it broke through. That to me is like, okay, well, go into your third day, there's your entry point. This indicates to me this is my exit point. So when you're
Makes
looking at
perfect
these,
sense.
take a step back and look at the bigger picture and go where and just start drawing lines. We take this, your little on trading views, you go over here to your horizontal line and you go, okay, right there's resistance. It breaks through here, is there support there? kind of thing. I mean, just chop it up, you know, flip through charts and look for these opportunities. And you can see where is this, if this, you know, it opens up today at 88.55, it will open up right now. I mean, this is 1 day candle. If it breaks through that, good chance we're going to start scaling down to where we saw 1, 2, a test, 1, 2 test, and then up.
Okay.
Just spend your time, take 15 minutes every day and just go through charts and look for this, because then this will lead into great opportunities for great entry and exit points.
When a chart moves into all-time highs, especially a chart that's only been around since March, okay, it's in what we call a discovery zone. It hasn't found its its structure yet, and so that's why on my charts you don't see a resistance level up there yet, because it's hard to have resistance when you have no history back, especially in this particular position. And so that's when you don't know, is it rocketing sky high? I mean, you already see it's outside the Bollinger Band. You know it's going to pull back in. I mean, it's just a fact, okay? And you can fight the fact if you want, but in every trade, and I'm here to talk about trades and swing trading and using the process. And I have a process, and it's not the one that is for everyone. And Paul has a process, and Trent has his process, and he uses, and Bob has a process. None of them are wrong, but I have to have a standard on the channel for new people to come in, so that then when they look at my guidelines and they look at what I say when they ask me questions, I always refer back to the standard guidelines I have, which are my guidelines. Okay, so that's why I'm not trying to be critical of anything, but that's why and I use my experience too. I've been doing this for a while to help out, and this when this intermediate resistance line comes on, and I'm not joking, it's over 90%, I would say, in my experience. Here's news class A. I mean, it came up, earnings, that line's on, and look at how hard that resistance is just on that. Okay, let's look at LBS. I've got a list of 60 of these that I want. Every week here's LBS, Las Vegas Sands. You pop in, it's under the 200. You get above the 9, you ride it. You get past the 50. What happens? Boom, it's underneath of 200. Look at that. Okay, 1, 2, 3, 4, 5, 6. You see the 9's catching up. It squeezes it down. I mean, these are things that I have observed that seem to happen a lot more than they don't happen. Budweiser. Okay, riding up 2 days. Boom, boom. Okay, this is just recent. What else? ROK.
The green line of death, that resistance line, it's calculated, so it always will pick up the mean of specific trading days. It's not like the stock knows the resistance. It's more like the resistance is created as a function of price action, and it's exclusive to this particular software. So you know what I mean?
But are you telling me this doesn't work?
No, I didn't say that. But you should understand. We should understand exactly how that's made. That's all I'm saying.
I can go back and show you.
Yeah.
See, look, here's how it's made. It goes back and calculates, from the past where it's going to show resistance. Okay.
Can you put AHR up there? I just wanted to show something. AHR. And keep it for a year, because you'll see that the resistance line's based on 3 trading days. So to me, it's like, yeah, that's a good company, Rockwell. See how that resistance line's only based on a few trading days. So I mean, sometimes if you look at the past of a company, or the chart.
But, okay.
So my point is that resistance line is calculated as a function of price action. It's not like price action creates it. It's not vice versa.
So so you're saying go ahead and trade above it then, because it means nothing, because it's only on 3 days.
I'm saying it's one metric. That's all I'm saying.
I'm saying it's a pretty strong metric, Paul.
Okay.
In my experience, you may ignore it. You can ignore it. I don't care.
Okay.
But
Mark,
but look,
I have a question for Paul. Paul, I notice when you pull up these charts and everything, you constantly say that this is a good company. What distinguishes to you what is a good company? As far as I'm concerned, all these companies are good companies. So I'm just wondering why you constantly bring that up.
Which
I mean,
company?
I'm just curious, you know?
Which company?
You
Like
just
which one
said,
are
you
you?
just said AHR is a good company.
Oh, the
What
healthcare REIT.
distinguishes that company over any other company from being good that you invest in?
Technical or fundamental? Like from technical. Let me do technical.
I'm asking you the question, where are you coming from?
But you mix them, Paul.
I do mix technicals with fundamentals. Absolutely. I mean, I use
Right,
technical is only.
but I just want to say to you, to the average investors trying to learn here, you say it's a good company. You got to kind of, look out how you say that. To me, I'm just saying to you, when I hear it's a good company, that opens my eyes, right? It's a good company.
Mhm.
To me, a lot of these companies we're talking about here are all good companies. The question is it the time to invest in it, technically or not, whichever way you want to look at it. But I'm just asking you the question, when you make that statement, what do you mean by that?
Credible. What I mean is credible.
Okay. I think
All
all
right.
the
So,
companies we're looking at are credible.
well, I could put up GameStop or I could put up a few silly stocks that are not credible or driven strictly by meme. They're driven for other conditions. So when I say
Sure they
good
are.
company,
Sure.
when I say good company, it has fundamentals versus some of them are just driven by the retailer or other things in the
Okay. So
news
now,
that make
now
it
I
not. Yeah,
understand.
that's what I
Now,
mean.
now,
Mhm.
okay.
Yeah, cool.
Okay. Thank you.
Hey, Mark, let me show you something real quick. Payment, something to take a look at when you're looking at a stock. So this is that core weave, and this is the S&P 500. A place to start possibly is to look at the bigger index. Where is the overall bigger market index being driven? And if you look at core weave, it became public March 28th. This blue line on the S&P represents where core weave opened up. And you can see the behavior of core weave as I go through this, and it's just almost identical to what the S&P 500 did.
Seems like it.
Now you run up, you had this run up from April 21st to where we are now. Now the S&P over here is hitting resistance, as we showed earlier.
You got to compare
And
them on the same chart. You can't do
it's,
it this way. You can't do it side by side. You got to have one
well,
chart.
it's funny. I am doing it this way. I'm trying to make a point.
You
Stop.
got.
Okay, Paul, stop. My point is, start with the bigger picture and then work into the smaller picture. Okay? If the S&P is going up, all boats float up, right? If the
Right.
S&P goes down, all boats will follow. Understand the mechanics behind this S&P picture, how big this is. This is trillions of dollars sloshing around in the S&P. Start there, that's your foundation, and then go up to the second story and then look. If this is going to go down, everything is going to pull it down. Everything is going to go with it. Unless it's a total value play like Berkshire was at the beginning of the year. Berkshire's not doing it's trading below my intermediate trend line. Ever since Warren came out, it's trending down because we've been in a high beta, high bull environment. Now, if we see this pull back, S&P pull back down to support around 5,700, what will Berkshire do? And that's to take a look at. That's that opposite correlation relationship. But start with the big money is moving around in, and then narrow it down. And I think that will give you a better risk management process in all this. And so it's just start big. What's the macro? And then narrow it down to the company you like. Because at the end of the day, this is all mechanical. At the end of the day, right now, gamma is positive in the options market. And the options market is, it's a big market. Us retailers, we're just a small piece of the pie. So start big, narrow down, and risk manage. Look for resistance and support. The more you look at charts and you spend time and 10,000 hours doing it, you're going to start to notice behavior. And that's what this is. This is human behavior and how it's translating into in the marketplace. Combine that with technology, and all of a sudden, you start to see sort of what's happening. Pardon me.
All
So,
right.
yeah.
This video is worth
Anybody-
watching again.
When you make comparisons, you got to put them on the same graph, and just from a technical standpoint, you can't have separate graphs look like that. You just can't. It's just not.
Well, I just did, and I think I proved a point. And the point is you start big, look at the macro, look at the economics, look at what's happening in the world, look at the big indexes, the S&P,
No.
the NASDAQ, what have you, because that's
You
where
put-
money is moving around in. That's where derivative market is betting against, okay, or betting for or against. Then narrow it down to the companies you like. You want to buy these at the best price. That's it. Build a process around this.
No, my point is you can't have, when you compare, stocks with the S&P or any index, you have to put them on the same chart. You can't have them separate charts because you have to have the same time frame or metrics going together. And if you did that, CoreWeave or other stocks, you could see if they diverge or converge. And CoreWeave is by far outpacing the S&P like crazy. But my only point is you can't have separate charts.
Well, okay. Go ahead,
Yeah.
Patrick. What you got?
Yeah, I just wanted to interject with regard to our rules of trading, and they're obviously very unique to each individual. And wondering, there must be some commonality and ranking system in our criteria that we use, and it would be useful to see if we could coalesce and produce a mission statement that we could all adhere to with regard to rules of trading.
That's a great idea.
I don't think that would
Because,
work,
because
Patrick.
we're disagreeing about something that's very fundamental with regard to these metrics, and these metrics have a purpose, and so there should be a logic in how we grade them and how we use them.
I think Patrick, I like what you're saying. However, I've been doing this a long time, and I have a lot of friends who are traders and investors and own their own companies and been in this for a while. And we can go out and have beers and have discussions on the same stock like we are now, and have totally different views on it and how we look at it and what metrics we look at to evaluate it, whether it's technicals, even within the technicals. Trent and I do not look at the same moving averages, which is fine, okay? But it's gonna affect the way we look at when we get in and when we get out, and that's based on what? Our risk management. So Patrick, your risk management is different. You look at a lot of stuff, Patrick. Hooker indexes and things that I'm just joking now, but that's stuff that actually, is interesting. I look at, 4 moving averages, 3 oscillators, Bollinger Bands and support resistance. And that after years and years and years of doing this and looking at all the different technical indicators out there, that's what I use. It works for me. Paul's looking at comparing, the divergence of the S&P against the underlying stock he's looking at. And that's how he does it. So I'm not sure that we can come up, my document's out there. I put it out there, because we have to have a base. And so we start with a base, and that's mine because I've been with the channel forever. And everyone else can have what they think. And I like this discussion, and it gets heated. And why does it get heated? Because we're pretty passionate about how we look at things and, how we invest our money. And I like that. I really do like that. And we should be passionate about how we invest our money and how we make money. And the nice thing about this channel is we can all talk about it and have different ideas. And
it's just that some people, and it's typically human, that we remain in our own silos and we stick to our rules when other rules could be more logically implemented to improve our outcomes.
I agree.
Well, listen, everybody has their way of investing and looking at charts. I think Mark's strategy does work. I've used it. Do I use it all the time? No. I have my own strategy. But the market has no feelings. So if you screw up, it's going to let you know. So I think the market corrects our stupidity when it happens.
The market is
I-
there to take your money away. That's the only reason the market
Exactly the
exists.
point, you know.
Yeah,
It's gonna inflict pain on you.
the best thing I've ever heard was you can think that it should do this one thing, but the market's going to do what it wants to do, and the best way to work to make money is just follow what the market's going to do. You know,
I just think that, you know, if you're doing something wrong, the market's going to let you know that you're doing it wrong. Not every time, you know, but it sure lets you know that you're doing it wrong. And, you know, because someone wants to show the charts in one fashion versus another, that doesn't change the world.
no. And you know, we're dealing with probabilities in the market. Nothing, they're not certainties, they're just probabilities. We're
Right.
looking at different things and trying to make an inference about the future direction of something based on past data.
And
You know, and
still,
then
yes.
and that's technicals. And then on top of that, we're looking at fundamentals. You know, some of us are looking at fundamentals, which is good. I choose to look at 3 different things for fundamentals in my long term, and the rest is all technical for me. And other people have different ways of doing it.
Yeah. My second point I want to make before I want to talk about Treasury yield bonds. They're heading northwards towards 5.5%, according to the latest sort of statements that have been made. So I'm just according to ChatGPT, historical precedent would indicate that if that is the case, then we're looking at a possible 20% correction over the next 3 months.
yeah, the 10-year right now is at 4.54%. The 30-year is at 5.02, and the US dollar today is down 1.35%. So to your point, Patrick, the bond market is telling you something. Basically telling a bit of a story of, you know, people aren't buying treasuries. They're not buying the US dollar. So where's that money going?
Is it time to buy some gold now? Do you think there has been a correction in the gold market, gold spot? Is it an opportune time to, because they say now the gold could go stratospheric in the next few months?
Well,
So this is the dollar. This panel to the left is US dollar, and as you can see here, it's basically had a run up, and since May 12th, it's starting to fall. This is gold here in the center, and it's made a turn higher, as we can see there, and then US treasuries are over here. So yeah, I think you got a good point, Patrick. You know, this is what the world transacts on. And that's where I look at this and I go, span out, look at the bigger picture, look at the bigger macro side of this, and then drill down and see how it relates. Very good point, Patrick.
Because the converse is always true. If the market is going to go down 20%, gold could go up theoretically 20%, really, as a correctional sort of thing.
It puts you close to 4,000, wouldn't it? If it's at spot prices at $3,303 right now, so 20%, puts you right at close to $4,000, right in this area.
Yeah.
That'd be a hell of a run, wouldn't it? Yeah. But you know, what's fascinating, this is what gets me up in the morning, is like, how does this all correlate together? How does this all work together? You know, and just spanning out your knowledge. Everybody has their process, and you know, I think everybody should have a basic level, but just what you brought up, Patrick, what's it mean when the US 10-year treasury goes from 3.8 to 4.5? What does that mean to you and I? Well, I know if I want to go get a mortgage, it's going to be a lot more than it was 2 months ago or a month ago.
Yeah, I put that to ChatGPT, and they said the historical precedent is that gold will go stratospheric because over the last few 10, 15 years, there is there's definitely a correlation, an inverse proportion between the two.
Yeah. Yeah. Cool. Well, final words from anybody? It's 8:30 Central, 9:30 Eastern.
I think this is a great time.
I
I think this,
enjoyed,
right? Yeah.
I enjoyed today's conversation, and you know, whatever works for you guys works. My mission here, when I told Kerry I'd do this, was to try to help people not lose money. Okay. And because from my back experience going through the dot-com crisis and the great financial crisis, when I was in the financial services and I saw people, regular people like us, get wiped out while institutions made money and destroyed people's lives. And, you know, I was in the system, but we were self-directed. We did not tell people what to do. Okay, we help people understand markets and market structures and things like that, like we try to do here. And I just don't want anyone to get hurt. And I want you to learn to make your own decisions based on what's comfortable for you and your risk profile. And you know, I go back to Trent was an advisor. Trent knows the game. Trent knows that all it is assets under management. Push assets under management, plug it into our computer, spread you out among 17 of our funds that we charge you 1.25%, and never talk to you ever again. You know, and how's that work for you? You know, how's that been working? Was that Bob?
It doesn't.
Right.
That's
It only
a
works for
problem.
one
It's
side.
amazing how much money they make.
It's
And they do absolutely nothing.
absolutely.
No wonder, Fidelity wants you just to collect assets. That's what they do. That's why they're one of the biggest asset management firms in the entire world.
It's
That's why
it's the best game out there.
it's a very profitable game.
Yeah.
You know.
Yeah.
I
So-
always think back to The Big Short when they go to Vegas to that securitization forum, and
You know,
and all those guys are sitting there drinking and limousines and all that stuff. Well, all that money comes from us.
but you know, when you sit on both sides of the fence, you're an owner of a business and you watch the fees because you pay the fees, and you actually review what they're doing. It drives me nuts. It just pisses me off how much I pay them. And I don't have an option under the 401k. They got you by the short hairs.
They do.
Yeah. But you can, well, anyways, that's another story.
No, what? Go
You
ahead.
can talk offline.
Go ahead.
Yeah. You
What were
can
you gonna
drive
say?
the fees down. You can get the fees down in a 401k plan.
Yeah, I have. I negotiate them down.
Yeah. There's a lot of ways to do it.
Yeah.
But yeah. All right, we'll go wrap it up here.
Woo, I'm exhausted.
Thank you all for this.
I need a
this
drink,
was a great
Patrick.
discussion.
Not a cup of coffee.
I
Take
did.
care, guys.
Oh,
See
is
you
that
guys
what it
later.
is? All right.
Thanks a
All right.
lot.
Take care, everybody.
Thanks
Take
a
care,
lot.
guys.
All the best.
All right. See y'all later.
We'll see you.
Have a great day. We'll see you
You too.
tomorrow. Live loud.